everyone, and welcome to Black Monday Bitcoin Masterclass, From Panic to Profit. I'm Anna, and I'm joined by my friend and fellow crypto enthusiast, Adrian. We've got a really interesting topic today, don't we, Adrian?
We absolutely do, Anna. And it's actually a bit, concerning if I'm being honest. We're diving into some pretty serious warnings about a potential Black Monday for Bitcoin that's been making waves in the crypto community.
Yeah, it's definitely got people talking. So, for those of you who haven't seen the headlines yet, there's been this, pretty alarming warning issued by top crypto experts about a possible Bitcoin crash. The kind of event that honestly keeps investors up at night.
Right, and this isn't just like random FUD being spread around. These warnings are coming from, respected voices in the space who've been tracking some concerning patterns in the market.
During today's episode, we're going to break down what these warnings actually mean, look at the recent Bitcoin price movements that might be causing concern, and really dig into the factors that could trigger such an event.
And more importantly, we'll also talk about strategies for how you might actually turn this potential crisis into an opportunity. I mean, that's what our podcast is all about, right? Moving from that initial panic to, hopefully, profit.
Exactly, because even in the most turbulent markets, there are always ways to position yourself strategically. So let's jump right in, shall we? So, Adrian, let's dive into what's been happening with Bitcoin prices recently, because, the volatility has been, pretty intense, hasn't it?
Oh, absolutely, Anna. The market has been, on this complete roller coaster lately. And if you've been watching the charts like I have, you've probably noticed these really dramatic swings that are, they're enough to make anyone a bit queasy.
I've definitely been glued to my screens. What I find particularly interesting is how we've seen these periods of, relative stability suddenly interrupted by these sharp movements in either direction. It's almost like the calm before the storm, isn't it?
That's exactly right. And what's really concerning some experts now is that we're seeing some of the same technical indicators that have historically preceded major corrections in the past. The article we're discussing today actually points to a potential Black Monday scenario, which is referencing the historic stock market crash.
The warning signs are definitely there. We've got this combination of decreased trading volume, some key resistance levels being tested repeatedly, and this interesting divergence between price and several momentum indicators. For those technical analysis fans out there, this is, it's a concerning pattern.
And I think what's really fueling these warnings is the current macroeconomic backdrop, right? We've got inflation concerns, central banks tightening policy, and this general uncertainty in traditional markets that's, spilling over into crypto.
Exactly. Plus, there's been this interesting correlation developing between Bitcoin and tech stocks lately. That relationship seems to be strengthening, which means Bitcoin is potentially more vulnerable to broader market corrections than it has been in the past.
That's a really good point. The days of Bitcoin being this, completely uncorrelated asset seem to be changing somewhat. And when you combine that with the technical picture we're seeing, it's no wonder some experts are raising the alarm about a potential significant drop.
What figures are you seeing being thrown around in terms of potential downside if these warnings materialize?
Well, some analysts are suggesting we could see a drop of, 20 to 30% from current levels if this Black Monday scenario plays out. That would represent a pretty substantial correction by anyone's standards.
So let's talk about these expert predictions more specifically. I mean, who exactly is behind this Black Monday warning, and what are they actually seeing in the data?
Right, so the article cites this top crypto analyst who's been, tracking these market patterns for years and and they're essentially saying that we're facing this perfect storm of conditions. The expert's basically pointing to this technical formation called a death cross that's forming on the charts.
A death cross. That sounds dramatic, but it actually has a specific technical meaning, doesn't it? It's when the 50-day moving average crosses below the 200-day moving average, which has historically been a really bearish signal.
Exactly. And what makes this particular warning so concerning is that this expert has correctly predicted several major market moves in the past. They're seeing this combination of, waning momentum, diminishing buyer interest, and this buildup of sell orders at certain price levels that could trigger a cascading effect.
The timing aspect of this prediction is fascinating too. I noticed they're specifically focusing on Monday as the potential trigger day. Is there something specific about market behavior at the start of trading weeks?
Oh, that's such a good question. Mondays tend to set the tone for the week, and there's this phenomenon where weekend news and developments finally get processed by the broader market. The expert is suggesting that a lot of institutional players might make their moves first thing Monday, which could trigger this domino effect.
Institutional players definitely have outsized impact these days. What about the reasoning behind their prediction? Are they pointing to specific catalyst events that might trigger this Black Monday scenario?
They're looking at several potential catalysts. First, there's this regulatory announcement expected from ... a major market that could impact crypto exchanges. Second, there's some major options expiring that could create unusual price pressure. And third, and I think this is really important, they're seeing signs of large whale accounts positioning for a significant move downward.
Those whale movements are definitely something to pay attention to. When the biggest holders start repositioning, it's often a signal. Did the expert provide any price targets or potential support levels where they think Bitcoin might land if this prediction comes true?
Yes. They believe we could see an initial drop to about, the $38,000 level, which would be the first major support. But if that breaks, they're suggesting we could test as low as $32,000 before finding real, substantial buying interest. And that would represent a really significant correction from where we are now.
That's quite the potential drop. Did they give any timeline for how long this bearish period might last, if it materializes?
Interestingly, they don't see this as a long-term bear market. They're describing it more as a sharp correction that might actually create this amazing buying opportunity. They're suggesting that after this potential Black Monday event, we could see a relatively quick recovery over the following, 4 to 6 weeks.
So, we've talked about the expert predictions, but let's dig into the external factors that could, really push these market movements. The article mentions financial, regulatory, and political events as major influencers. What do you think is the most critical right now?
Well, I think regulatory concerns are probably the biggest factor right now. We've seen this, constant back and forth from different countries about crypto regulations and and it creates this uncertainty that the market just really doesn't like. And when major economies like China or the US make announcements, it can send shockwaves through the entire crypto ecosystem.
And that's so true. And these regulatory shifts aren't happening in isolation either. They're often connected to broader economic conditions, right? I'm thinking about inflation concerns, central bank policies, all that stuff that's been making the traditional markets nervous too.
Absolutely. And don't forget that interest rates are a huge deal here. When rates go up, speculative assets like crypto often take a hit because that risk-free money becomes more attractive. So all these macro financial factors kind of create this environment where Bitcoin becomes extra vulnerable.
I also noticed the article mentioned political events as potential triggers. What kind of political developments do you think could impact crypto prices in the coming weeks?
Oh, there's so many possibilities there. Elections can definitely move markets, especially if candidates have strong positions on crypto. But also, geopolitical tensions like what we're seeing in various parts of the world can drive people toward or away from Bitcoin, depending on whether they see it as a safe haven or a risk asset. It's really fascinating how that perception can shift.
The safe haven versus risk asset debate seems to change with the wind these days. Do you think institutional adoption plays into these external factors too?
Oh my God, absolutely. When big institutions get involved, they bring their own set of concerns and influences. Like corporate treasury decisions can create these massive buy or sell pressures. And institutional investors are often much more sensitive to those regulatory uncertainties we talked about earlier.
Then there's the technological aspect too. The article didn't focus on this much, but network upgrades, security issues, or even competing cryptocurrencies can create volatility, don't you think?
100%. Technical factors are huge. Remember when those mining disruptions happened last year? The network hash rate dropped and prices followed. Or when a major exchange has security problems, the whole market feels it. These aren't just isolated incidents. They're part of this interconnected system where one technical problem can cascade through the entire market.
It reminds me of how fragile yet resilient this ecosystem can be. All these factors, financial, regulatory, political, technical, they all interact in complex ways that make predictions challenging even for experts. Let's shift gears a bit and talk about something really important that the article emphasizes, the risks involved in cryptocurrency trading. Because, this is something we absolutely need to address, especially with these Black Monday warnings floating around.
Oh yeah, definitely. I think people sometimes forget that crypto trading is not for the faint of heart, you know? Like, we've both seen people lose significant amounts of money because they jumped in without really understanding what they were getting into.
Exactly. The article specifically mentions that trading cryptos involves high risks, including the risk of losing some or all of your investment amount. That's a pretty serious warning that we shouldn't gloss over.
It's super serious. And what I find is that new investors especially tend to see the massive gains that happen during bull runs, and they think, oh, this is easy money. But they don't. They don't fully appreciate the downside potential. Like, Bitcoin can drop 20% in a day. And that's just considered normal volatility in this space.
The psychological impact of that volatility can't be overstated either. I've seen people make terrible decisions when they're panicking during a crash, selling at the bottom, trying to catch falling knives, or even worse, increasing their leverage to try to recover losses.
Oh my God, yes. Leverage is such a dangerous tool in crypto. The article mentions trading on margin specifically, saying it increases the financial risks. And that's putting it mildly, right? When you're leveraged and the market moves against you, it's not just your initial investment at risk. You can end up owing more.
This is where understanding your own risk appetite becomes critical. Not everyone should be trading crypto with the same approach or allocation. What's your take on how people should assess their personal risk tolerance?
Well, I think it starts with some serious self-reflection about what you can honestly afford to lose. Like, if losing your crypto investment would mean you can't pay your bills, or, it would affect your mental health in a serious way, then you're probably overexposed.
That's such an important point. The article also mentions considering your investment objectives and level of experience before trading. A beginner shouldn't be using the same strategies as someone who's been in the market for years.
Totally. And I always tell people that your time horizon matters too. Like, if you need that money in 3 months for for something important, then maybe crypto isn't the right place for it, given the volatility we're talking about, especially with these Black Monday warnings,
Risk management strategies become even more important when we're potentially facing major market downturns. Do you have any specific advice for our listeners on that front?
Position sizing is absolutely critical. Never put so much into a single trade that you can't sleep at night. And maybe consider using stop losses, although in crypto those can be tricky because of how fast the market moves. But mostly, just don't invest money you can't afford to lose. That's like the golden rule, right?
So, Adrian, something that really jumped out at me from the article was this whole issue of market data reliability. We're talking about potential crashes and investment strategies, but how can anyone make good decisions if the data itself isn't trustworthy?
That's such a good point, Anna. And it's something that a lot of people in the crypto space don't talk about enough, Like, the article specifically warns that the data on crypto websites is not necessarily real-time nor accurate. And that's pretty concerning when you think about it.
Absolutely. And it makes me wonder how many traders are making decisions based on information that might be delayed or just plain wrong. Could this contribute to some of the panic selling we see during downturns?
Oh, 100%. Imagine you're looking at a price that's actually, like, 5 minutes old during a volatile period. By the time you make your trade, the actual market could be completely different, right? And what happens is people get really confused when their trades don't execute at the price they thought they were getting.
The article mentions something really interesting about this, that prices may differ from the actual price at any given market. I've seen this myself, where Bitcoin might be trading at slightly different prices on Binance versus Coinbase versus some of the smaller exchanges.
Yeah, and those price differences, they create these arbitrage opportunities for sophisticated traders, but for the average investor, it's It's just confusion and potential losses, you know? Like, you might think you're getting a good deal, but actually, you're trading on an exchange with an inflated price.
What I found particularly eye-opening was the article's explanation that some prices may be provided by market makers, and so prices may not be accurate. This gets into the whole issue of who's actually setting these prices and whether there are conflicts of interest.
Exactly. And when we talk about market makers, we're talking about entities that have a vested interest in market movements. They're not neutral observers just reporting prices. They're active participants who profit from trading activity.
Oh man, it all comes back to that old crypto saying, don't trust, verify. But how can the average investor verify when there's so much conflicting information?
That's the million-dollar question, isn't it? I think one approach is to look at multiple sources before making any significant trade. Check a few different exchanges, maybe use an aggregator that shows prices across platforms, and ... And definitely don't rely on just one website or app for your data.
These reliability issues make those Black Monday warnings even more complex to navigate, don't they? If we can't even trust the basic price data, how do we properly prepare for potential market crashes? So, given all these warnings about a potential Black Monday scenario and the data reliability issues, let's pivot to something more constructive. What strategies can people actually use to, weather a Bitcoin crash? This is what our Black Monday Bitcoin Masterclass is all about, moving from panic to profit, right?
Yeah, exactly. And I think the first thing people need to do is, prepare mentally before anything else happens. Because most investors, they make their worst decisions when they're panicking, you know? So having a plan in place before any crash happens is absolutely critical.
I couldn't agree more with that. Would you say dollar cost averaging is still one of the most reliable approaches during market downturns?
Oh, 100%. Dollar cost averaging it's probably my favorite strategy for these volatile markets. Instead of trying to time the bottom, which, let's be honest, is nearly impossible, you just commit to buying a fixed amount on a regular schedule, regardless of price. So when that Black Monday hits, you're actually picking up Bitcoin at discount prices rather than panic selling.
That makes so much sense, and it removes some of the emotional decision-making that trips people up. What about portfolio diversification? Does that still matter in crypto winter scenarios?
It matters even more during those times. Here's the thing. When Bitcoin crashes hard, it tends to drag down the entire crypto market. But not everything falls exactly the same way, right? Having some stablecoins ready as dry powder lets you actually take advantage of those fire sales, and maybe even having some investments completely outside of crypto as a safety net.
Speaking of stablecoins, I've heard some investors talk about setting up automatic buy orders at certain price thresholds. Is that something you recommend?
I absolutely do. Setting those buy limits at 10%, 20%, 30% below current prices is super smart. That way, if we do get that sudden Black Monday crash, you're automatically buying the dip while everyone else is, Duke is freaking out and trying to figure out what to do.
What about the psychological aspect? Many people just can't handle seeing their portfolio value drop by 50% or more overnight.
Yeah, that's where having the right mindset comes in. If you truly believe in the long-term value proposition of Bitcoin, which I do, then these crashes are actually, they're opportunities, not disasters. I always tell people, only invest what you can afford to hold for at least 3 to 5 years. That way you're not forced to sell at the worst possible time.
And for those who might be a bit more advanced, are there ways to actually profit directly from a crash rather than just buying the dip?
Well, there are options like ... like futures trading and short positions, but I have to emphasize these are extremely high-risk strategies. For most people, the safest way to profit from a crash is just to accumulate more at lower prices. Because when the market eventually recovers, and historically it always has, those who bought during the blood in the streets end up in a much stronger position.
That's the perfect way to sum it up. Turning panic into opportunity seems to be the real skill here. So, as we wrap up this episode of Black Monday Bitcoin Masterclass, I think we've covered a lot of ground today, haven't we, Adrian?
Yeah, we really have. And I think the main takeaway here is that, warnings about potential crashes shouldn't cause panic, but instead, they should actually prepare you, Having that plan in place before anything happens is absolutely crucial.
Exactly. We discussed the expert warnings about a possible Black Monday scenario, the market factors that could trigger volatility, and most importantly, strategies to navigate through it all.
Right. And don't forget about the data reliability issues we talked about. The crypto market is like ... It's still pretty young compared to traditional markets, so the information you're basing decisions on might not always be, completely accurate or real time.
That's such an important point. I think we need to remind everyone that cryptocurrency investing carries significant risks. Never invest money you can't afford to lose, especially in such a volatile market.
Absolutely. And remember that your investment objectives and risk tolerance should really guide your decisions. Some people can handle the roller coaster, but others might need a more conservative approach, right?
Before we go, I just want to emphasize that this isn't financial advice. We're sharing perspectives based on the article and our experience, but everyone's situation is different.
Yeah, exactly that. And thanks everyone for joining us on this episode of Black Monday Bitcoin Masterclass. From panic to profit. If you found this helpful, please subscribe and share with other crypto enthusiasts in your life.
We'll be back next week with another deep dive into the crypto world. In the meantime, stay informed, stay prepared, and above all, stay calm when the market gets wild. If you enjoyed this, don't forget to like, subscribe, and drop a comment below. Let's navigate this crypto journey together.